Well, thank you everyone for taking the time to join us today to learn about our Blended Capital Fund. I'm Christina Fuentes from the New Jersey Economic Development Authority. I'm Vice President of Community and Business Development for those who may not know me. But I'm super excited to have this holistic lending platform and to really leverage our MDIs and CDFI partners, whether you're new or existing. I'm so excited to have an actual new feature to really support our small businesses. We were able to partner up with Calvert Impact, and some of you may or may not know them, but it's a very innovative platform that we could utilize, but we've also utilized our state small business credit initiative dollars as well. So the state has invested $50 million into supporting small businesses through this Blended Capital Fund. And so we're looking to obtain new partners that will help assist with this whole initiative. And that's what today is about, to help show kind of what the initiative is and how it's going to work and how you would work with Calvert as well. So I will kick it over to Beth, who will explain the whole process.
Wonderful. Thanks so much for having us, Christina, and really excited to talk to everyone today. And I'll just caveat that kind of today is, I'm hoping, is the first of many conversations. We're going to do a quick overview of the model, some of the things that we've learned from doing this work, the work we've done with many CDFIs across the country, how it's relevant and going to be executed in New Jersey. But there are a lot of pieces of this puzzle to think through as a participating CDFI or MDI lender, and so wanting to make sure that you all know there's an open invitation for follow-on discussions, questions on how this fits, how it works, and what might make sense for your organizations. So with that, I'll jump in. And give a little bit of background. As Christina mentioned, I'm Beth Bafford. I lead strategy and new product development at Calvert Impact. I've been at Calvert Impact for about 10 years now, and really focused on how to support the ecosystem of local lenders, figure out how to support market development, and looking at where we can help drive efficient and affordable capital to and through CDFIs and other community-based lenders to support the small business ecosystem. Calvert Impact, for those of you who are not familiar, is a global nonprofit based in the DC area. We have been around for about 30 years and have done a lot of work lending with and alongside CDFIs, MDIs, and other community-based lenders. And so have a long history of supporting the sector, and really excited to do it in this new way through the Blended Capital Fund. So with that, I'll get into some details, and feel free to ask questions. So one of the kind of holistic things that we're thinking about as we come out of COVID and kind of the next period of economic uncertainty, but potential for growth for small businesses, is really looking at how we support the overall market around CDFIs and other community-based lenders. And so what we know from the sector is that it takes a whole host of functions and areas of support to really support and scale an organization, and support each organization's ability to go both deeper and broader in your impact in your communities. And so when we think about the ingredients to support the sector, right, it's not just liquidity, it's not just capital, it's not just systems and technologies, it's not just human capital, it's kind of all of the above. And how do we look at the different ingredients that need to be true to support that growth, and create models that are thinking about that holistically. That being said, obviously we can't be all things to all people, and so as we've developed this model, we've tried to address as many of these kind of touch points or pain points as possible. But we, obviously still some limitations where we rely on other parts of the ecosystem to fill gaps. So obviously we know that balance sheet equity and kind of grant capital is extremely important to support growth. This model doesn't allow for us to do that with the sources of capital, but we know that we're trying to kind of crowd in other sources and advocate for things like the CDFI funds programs and others to support kind of balance sheet equity. But we are really looking at how we address some of these other pieces of the puzzle. And so when we talk through the model, I would say the main pieces of the kind of main parts that we're focused on are access to affordable and kind of growth liquidity. So really looking at how we support growth in lending through off-balance sheet liquidity. Two is kind of operational and technical support, creating kind of a community of practice amongst the CDFIs to look at how you think about the operational infrastructure needed to support increased lending volume. And then three is really driving customer acquisition and really enabling you all to connect with a greater set of clients so that you're both kind of supporting and kind of helping existing clients in new ways, but also increasing your client base, looking at how you're able to support more small businesses and get connected without having to increase your own kind of marketing customer acquisition spend. So those are the kind of the core pieces of this work, and that we'll talk through in more detail. So essentially what the model is, and so we have run a series of 5 programs throughout the pandemic, 4 of which have been in states, and 1 of which is a regional effort across the South and Southeastern US. But we've been refining that model as we've gone along. So we had a program early days of the pandemic in New York called the New York Forward Loan Fund, and then refined that as we went out to California and in Washington, across the South, and now in Connecticut. And we're really excited to kind of bring the best learnings from those models to the blended capital fund structure in New Jersey, and really looking at how we implement locally. The 3 main kind of legs of the stool, if you will, are capital, what I mentioned is kind of liquidity, technology, which is 2 really critical technology platforms built for these programs that are both supporting customer acquisition and kind of ease of and kind of lowering customer acquisition cost, as well as facilitating all of the reporting required to participate in the programs because of the use of SSBCI dollars, as Christina mentioned. And then the 3rd leg of the stool is technical assistance, and how do we create both within CDFIs and outside of the CDFI and lender network, how do we create the right technical assistance ecosystem so that we're supporting small businesses to get credit ready if they're not, or looking at kind of post-loan support for businesses that need ongoing help. The goal of this program is essentially, our mantra has been to centralize everything that should be centralized to reduce cost and burden on the lenders, and keep local everything that should stay local, which is the relationships between you and your borrowers, the servicing of the assets, a lot of the hands-on support. So really making sure that we're positioning the lenders to do what they do best, or do what you all do best, which is really work with small business owners to ensure their continued success. So going into kind of those pillars in a little bit more detail. So the way in which we work with kind of the initial interface for small businesses will be a website designed for this program, and so we'll be naming the program. So we're kind of going through the branding process for that, naming the program. There'll be a website URL that we'll use to market the program, and we'll have a kind of concerted marketing effort to really get out to the small businesses that we're intending to serve. On that website, there is a portal where small business can easily click and say, I'm interested in pre-applying for a loan. With that portal that we use is CRF's Connect platform, which is, you all may be familiar with, but is really a set of 15 or 16 simple questions that the small business owner can fill out so that we can effectively match them with their community lender. And so that is the kind of matchmaking platform that really helps drive customers to you, and also allows you to tailor the kinds of businesses you want to be seeing in pipeline. So happy to go into that more detail, but that's kind of the front end. And so everybody comes through the same customer experience. It's easy to access. It's accessible on mobile. I think the majority now of small businesses apply on phones. And so it's an easy way to create a quality customer experience, and then get that business over to their matched community lender so that you can then pull them through your process, your originations process. We can go through more detail on kind of systems integration, which we think is an important piece of this, but I'll wait before we get into the weeds. Switching to the lending product. So what we've done is worked with many CDFI partners to really refine what we think as a really broadly accessible and flexible loan product that each lender originates across the state. And so what we've done is kind of design the product, refine that over time as we've learned what things work in the market and what doesn't. But it's a pretty, I would say, kind of plain vanilla working capital term loan available to small businesses that meet the standard eligibility requirements. There is no specific collateral required for eligibility, but a blanket UCC put on business assets and a personal guarantee from anybody with 20% or more ownership in the business. Flexible use of proceeds. There are some restrictions around refinancing that are coming through the SSBCI program, but generally flexible in use of proceeds. No fees with a max loan amount of $250K. So the product itself is relatively simple and standard. And then the eligibility is really looking at the New Jersey businesses that are less than 50 employees and less than 10 million in revenue, that have been in business for at least a month, sorry, at least a year. I saw 12 and thought about a month, that are in good standing, and they're either a for-profit business, and it could be anything from an LLC, a corporation, or a sole prop, or a 501c3 nonprofit. And then there's certain eligibility criteria, certain underwriting criteria that the lenders will use to ensure proper debt service coverage, kind of credit checks, things like that. But trying to keep the standards, the kind of minimum standards, pretty simple. And then we work with each CDFI to understand if there's any additional underwriting criteria that you all want to put in place. There is an ability for lenders to specify geography. And so if you're a lender that only works in a certain part of the state, you can specify that you want to see businesses in that county or that MSA, so that you're able to geographically target the pipeline. The kind of technology piece that we talked about. So we talked through the technology piece, talked through the kind of loan product, and then looking at the technical assistance side. So what the Connect platform allows us to do is also onboard technical assistance providers onto the matching site, so that a CDFI, when a small business applies to the program, they can get matched with both a CDFI lender and a technical assistance provider. Or if they don't meet certain basic eligibility criteria and don't get matched with a lender, they can still get matched with a technical service provider, so that they're able to reach out to that organization, get support, and understand how to support with credit counseling, or support with business planning, or financial projections, and help get that business to a place where they can access capital. And so we're working with the state and Christina's team now to identify those technical service providers, so they can be a part of the program's ecosystem. We have a group of lenders that we've worked with in other programs that are interested in originating in New Jersey, and are really excited to add to this list, with both local and regional lenders who are interested in originating for New Jersey businesses. And then I'll walk through kind of the liquidity piece of the puzzle and the economics for the CDFI, so that you know kind of the dollars and cents for you all. So essentially how it works is any applicant that comes through the platform, it gets underwritten against the program's criteria by the local lender. Those lenders then are able to post those assets for sale in a different platform called the exchange. And the fund, the blended capital vehicle, will essentially purchase 80%, an 80% kind of pro rata pari passu, sorry about that, portion of each loan. And so 20% of the loan stays on your balance sheet and is 100% of the loan is serviced by the originating lender for an exchange for a servicing fee and an origination fee. So at the point of purchase, when you're selling 80% of the asset, there's a 3.5% origination fee earned on the whole loan, and then there's a 125 basis points servicing fee paid annually on the portion sold, the 80% sold. And so it allows for you to have kind of maintain the spread on the loan for the portion that you're holding, the 20% portion that you're holding, while earning fee revenue on the portion that's sold, to create some kind of revenue diversification and allow you to leverage the available liquidity on your balance sheet by kind of 5x. And that process, that loan sale process, we've tried to make as simple as possible. And it's really at the loan sale process that we collect the information on the borrower that we need for reporting purposes. So we try to make it really easy for CDFIs to post and sell assets, fill out the various data points that we need for reporting so that we're not kind of bugging you on an ongoing basis for the information. So I'm going to pause there and see if there are questions. Oh, looks like we got some questions in the chat. So I'll just, and Joe is on them. So just for everybody's benefit, if you're not looking at the chat, what percentage do you keep? What percentage do you sell? So you keep 20%, sell 80%, and that's an SSBCI kind of requirement. So we're kind of buying the maximum amount we can under the program guidelines. The fee is paid by the fund. So the origination fee is paid by the fund. There is a small kind of allowable fees charged for kind of third-party expenses, so like UCC filing fees and things like that. I think it's up to $250, but Joe can correct me. That is allowable to charge to the borrower, but otherwise there are no fees on the loans for the borrowers. And same with the servicing fee. So essentially how the servicing fee work is once you've sold the assets, you'll be collecting the payments from the borrowers, from your borrowers, holding the 20% that is on the portion of the loan that you're holding, netting out your servicing fee, and then passing along the remainder of the funds over to the fund, which will then be used to support the kind of pay the private capital. Joe, let me know if I've misspoken anywhere.
Sounds good. We got a question from Michael in the chat, which I'm happy to take, just to walk through maybe the loan sale process.
Yeah, that'd be great.
Cool. So high level answer to the question is the loans are reviewed individually. So we will have a semi-monthly, so twice a month loan sale process. Loans that you wish to submit for purchase by the fund will be marked accordingly in CRF's exchange platform. And then CRF, as the fund administrator for this program, will conduct an initial review of the eligibility of those loans for purchase by the fund. So they'll review the uploaded loan documentation, loan terms, and ensure that everything looks as it should and falls within the credit box for the program. And once they are satisfied that that is the case, they'll submit the proposed loans for that purchase cycle over to Calvert, the lead servicer, who will conduct our review and then go ahead and kind of proceed with the money movement and the loan purchases and payment of the origination fees. So we do perform a quality control check on every loan individually, and the state actually will have a role in that as well. There's a number of guidelines from the Treasury that are, passed through to us, and so it's incumbent on us to make sure that we are maintaining compliance with the Treasury requirements.
Awesome. I think Jesse, do you have a hand up?
Yeah, hi Beth, hi Joe. I'm Jesse Lee from Renaissance Economic Development. We're a local CDFI in New York City, so we kind of know about this program because we're doing it here in New York a little bit. Similar, the New York City Opportunity Fund. But just curious, maybe I missed in the beginning, what's the total fund gonna look like? And then how many CDFIs are you looking to participate? Like, is there a limit cap on that?
Yeah, it's great question. So the state has committed 50 million to the program, and we're leveraging that with private capital. And the goal is to actually kind of recycle the assets over time. So we'll be originating a certain portion of assets and then pooling them and then originating again. So the goal is to recycle as many times as we can within the kind of period of the SSBCI, but it will be a minimum of, I would say, 100 to 150 million in loan volume, with the goal to recycle funds. And then in terms of participating CDFIs, we really want to kind of work with you all and the state to identify kind of the right coverage. We look for just a mix of lenders who serve certain types of small businesses or certain populations, look for local presence, and then look for also just volume and making sure that we can serve the interest and demand for the program. So that it's more of an art than a science, and there's no explicit cap on number of CDFIs.
Thanks so much, Beth.
Yeah, absolutely. Michael?
Yeah, hi, Michael Vall from True Fund. Just a quick question. Will each CDFI be given a certain amount that they can lend? The only reason I ask that is because, if the funds get used up quick and, we do a bunch of loans and you're only meeting twice a month, it could be possible that we get holding full amounts on loans that we were hoping to sell.
Yeah, no, absolutely. So we'll really work with you on the allocation. So what we do is provide an initial allocation to all CDFIs. So you have kind of room, and that is reserved for volume that you're planning to sell. And then as you get to, I think, 70 or 80% of your allocation, there's a process, there should be a relatively quick turnaround to essentially request an increase in allocation. As long as we have available allocation to give, we'll commit to an increase based on kind of expected volume and pipeline. And so gives us the ability to make sure that we're not kind of over allocating, but also gives you the headroom and the knowledge that kind of safety in knowing that what you originate will be available for sale as long as they're eligible assets.
Great, thank you.
Yeah. These are all really great questions. So I'll turn now to just kind of how we're thinking about the timeline and next steps, and certainly welcome additional questions. Oh, did we get another one?
Yeah, there's one more in the chat.
Liz, sorry. Are there restrictions on the source of funding that CDFI used? Not restrictions. I think we might need to know the source of funds. So one of the things that we track for SSBCI is the leverage, so additional private capital that's coming into the loan. And so we are bringing private capital kind of from the fund side to make sure we have the match on the dollars, and then the 20% held by the CDFIs helps with additional leverage. And so if it's not private capital sources, if it's other, kind of sources of funding, I think we'll just want to know that. But Joe, are there any additional restrictions on just kind of the balance sheet liquidity they use?
I was just thinking anything that would restrict or prohibit their ability to sell the 80% portion to the fund. So, but that's all that comes to mind.
Liz, I don't know if you have a specific kind of source that you're thinking about, but happy to follow up on that if there is.
Thanks. Yeah, we just have funding from a number of different sources, including some federal, some state, and then other private sources. So it was just kind of a general question.
Yeah. Okay. No, it's a great question. So I'll talk to Christine and the EDA team in terms of state funds, but otherwise, I think we should be pretty flexible.
Okay.
Jesse, did you have another question?
Yeah, so sorry, Beth.
No, jump in.
I was wondering, so I see that July 1st is the time you want to onboard new lenders. Is it like you have to get all of them by July 31st, or is it like a rolling basis?
Yeah, I mean, the beauty of this program versus some of the kind of the COVID programs that we ran is that it's really built to be a long-term program. So it's built to be in the market for the period of SSBCI, which is 6 to 8 years, depending on when you start counting. And so the goal is that for small businesses, it's a source of kind of stability in the market, knowing that this is a source of affordable credit for them when they need it. But also for the lenders, for you guys, that it's something that you can kind of come in and out of depending on other priorities and activities. So you could say, this is great, but we've got a lot of other stuff going on between now and the end of the year. And so I really want to start originating in, early 2024 and then originate for 9 months and then say, we've got another program, a local program that we're running that is going to take most of our capacity. So we're going to turn our product off for a period of time. So we're trying to build in that flexibility. And then we look at the full lender group and just make sure there's total capacity at any time amongst the CDFIs. So this is the timeline we put out just to kind of understand who's potentially interested in joining for launch, just so we have enough time to do the onboarding, training, and the kind of operational setup that's required. We're hoping to launch the program sometime after Labor Day, and so want to make sure that we understand by the end of July kind of who's going to be in for launch. But if you're interested and not available to start in September, you can always say, interested, keep us posted, but something that makes more sense for 2024.
Thanks
Sarah,
so
do you want to jump in?
Sure. So I want to maybe share some comments about how you get approved to originate. So Sarah Bennett, I'm with Calvert Impact and responsible for working with and supporting the CDFIs that participate in our SSBCI programs. And part of that responsibility is getting you as CDFIs approved to originate the loans under our private capital guidelines. And the process is really straightforward. We have a due diligence packet you complete. And once I have that information, I complete a basic CAMEL underwriting, which takes just a couple of weeks, and then you are good to go.
Great. So yeah, so anybody that kind of expresses interest and wants to join us for launch, love to do that by kind of late July, and then we'll work with Sarah to go through the process. We collect information and just make sure that we have a good understanding of each lender that participates, so that we can kind of approve and move forward. And that also just helps us kind of understand lending capacity, operational challenges, and then also areas where there might be opportunities for kind of shared learning amongst the group. So one of the things that we're learning a lot from various CDFIs across the country is just the ongoing prevalence of fraud and challenges with fraudulent applications, fraudulent businesses. And so, when we do our review, we also kind of look at the practices, understand what the current practices are, look at the best practices across the industry, and see if there's ways to kind of connect you with other lenders as you think about fraud detection practices, right? So just an example, but it allows us to get insight into kind of current state of play, and so we can figure out if there's ways to support or augment. And then Michael, I saw your question in the chat, grant funding for capacity, not built into the program. It's a restriction on the SSBCI use of funds, can have to be used for capital. But we are always looking for local or interested philanthropic players who want to kind of augment the program by providing operational support. And so we are always in the market for that, and are having some conversations to see if there's some additional funds we can bring to bear.
And there's one other hand up, Beth. So Liz, do you have a question?
Oh,
yes, thanks. Can you hear me?
yes.
Yep.
Okay, great. I see that the maximum loan size is 250,000. Is there a minimum loan size? Do loans have to be above a certain threshold to be eligible for purchase?
That's a great question. We usually don't set an explicit minimum, but let the CDFIs set their own minimums in terms of the businesses they get matched with. So you can set your loan size range based on the size of the loan that the business requests.
Okay.
We have gone all the way down. I think in some programs we've had $2,000 loans. Some lenders cut off, depending on kind of consumer lending laws, some cut off at 5,000. So it really depends on kind of your comfort. But we don't have an explicit, I don't think, Joe, we have an explicit minimum. Yeah.
Okay, thank you.
And also, like, if you are used to making smaller microloans, if your typical loan products are 50K and below, you do not have to originate $250,000 loans. You can set your product in the Connect system so that you're only looking at people who come in with requests of 50K or below. We often say to kind of put a little wiggle room because, as we all know, some businesses ask for more than they can actually access. And so if someone asks for 65 but you're able to support them with 45, we want to make sure those folks don't fall through the cracks. But there are ways to manage loan size based on your kind of your internal and typical processes.
And then the only thing I want to add on top of that is, my name is Dan Moret. I'm with Community Reinvestment Fund. And so we, like Beth was saying, are running the technology platforms that are sort of the underpinnings of all these transactions. Within the Connect tool, there's also work in progress limits. So you and your team can feel confident you're not going to get dozens or hundreds of leads and provide a really poor customer experience to folks. You can say, hey, I can only work with 6, 8, 15 businesses at one time. And you can set that as a work in progress limit, allowing those businesses who might fall above that threshold to go to other lenders in the program, knowing that you are protecting your own internal capacity, which is why we want to have this really talented pool of diversified lenders so that we have capacity across the program to ebb and flow as folks, like Beth was saying, have other capacity issues or other programs that they're trying to prioritize. All of that is available within the tool. So if you are a smaller lender and are worried about, hey, I can't handle several hundred new leads, the tool can also protect your capacity as a lender for those types of concerns.
Wonderful. I'm looking to see if there's additional questions. These are all exceptionally good questions. So really appreciate everyone's engagement. I guess one thing that, Dan, maybe it's helpful to walk through is just a little bit of an overview of kind of how you set up your product in the system and what controls you have over the leads. You mentioned the volume controls, but the ability to set up a product to kind of customize the leads that they're getting.
Absolutely. So like Beth had been alluding to, there are, I believe, 16 different filters available to lenders within the Connect platform, allowing you and your team to filter for industry, credit type, request size, geography, type of business, profit or revenue thresholds, profitability, collateral available. If your lending policies require some securitization that you would need to feel comfortable making these decisions, all of that is able to be screened for and filtered in the Connect tool, so that your team, if you're only serving, Trenton, your team can filter for just Trenton-based businesses who are in the manufacturing industry, who have who have made at least $100,000 last year in revenue. All of that is available for your teams to set up within the tool, so that you can feel confident that the businesses matching to your organization are companies that you can serve, or organizations that you can serve within your current policies and credit standards.
Perfect. Thanks, Dan. Another question in the chat from Charles. Will each participating CDFIs be limited by the number of loans they're able to originate? Not limited by number. I think it's really by allocation. So it's dollar allocation. And so as we're talking about, typically we do an initial allocation. So say initial allocation of $2 million in loans that you're eligible to sell, and that's the kind of 80% portion. Once you get to 80%, I think it's 80% of that, you can come back and say, request, I'd like an additional 2 million in allocation, or additional 3 million in allocation. And here's kind of the pipeline I'm seeing that will allow us to get there. And so we'll work with you to kind of increase allocations over time. We do look at kind of size of, when Sarah does her review, we look at the, historic side lending activities, operational capacity, ability to service and manage, right? We don't want to kind of get folks kind of over their skis in terms of the volume that you can manage with your internal capacity. But the whole purpose of the program and the structure of it is to support your ability to do more than you otherwise could. And so the purpose is to really support your ability to grow your originations and kind of better leverage your balance sheet. So, I'd say within limits or within reason, but the goal is to allow you to support as many businesses as you can. Joe, I don't think there's concentrations in loans over 100K.
No, there's not.
That was a Connecticut only thing, I think. Charles, did that answer your question? Can't see people. I'll assume yes. Wonderful. Any other, Joe, I don't know if you want to just give a quick overview of kind of the really fun legal stuff. So for participating lenders, without going in too many weeds, but essentially the documentation that we put in place to support the program, to make sure we have you all have the assurances from us as participants and vice versa. So you want to just give a quick overview of the documents that the CDFIs would sign?
Sure. Yeah, there's two key docs that we would ask each participating CDFI to execute prior to participating in the program. And so the first is a loan purchase agreement. This is the document pursuant to which we, the fund, will purchase eligible loans from you, our 80% portion of originated program loans. And so that will cover kind of the eligibility criteria and underwriting criteria that we ask you to follow. It's pretty deferential, I'd say. We've got some standard eligibility terms, but in terms of how you go about underwriting, we want you to do what you do, and for your standard book, the rest of your book. The other document is the subservicing agreement. So we ask you to retain servicing for the entire loan, not just your 20% retained portion, but the 80% held by the fund as well. Again, leveraging the strengths of the CDFI community, your relationships with your borrowers. And so that'll outline some of the some standard policies and practices, and obviously the compensation you'll earn as a servicer as well. Beyond that, we have a program operations manual, which will outline in detail how loan purchases work, how loan remittances work. So when you take in the P&I payments from your borrowers, how those are remitted to the fund, and you take your servicing fee out of those before that remittance, and all the other sort of ins and outs of the program and expectations for the CDFIs, and we hope it's kind of a living document that we'll work on over time to make sure that you and your teams feel fully equipped to participate.
And then Dan, do you want to just give a quick?
Thank you, Beth. I was just going to say, our team also has a couple of very short legal documents that we would have in terms of your use of the technology. The one being an order form, where you formally order the software from our team, and subsequently there is a partner agreement laying out what we expect from the participants on our platforms and what you guys can all expect from us in terms of performance and our commitment to you. If you are, and I know we have some folks on the phone who are current members of CRF's Connect platform and CRF Exchange platform, you need not sign these again. That is a blanket contract that we take from program to program. But if you would be a new participant on the platform, we would ask you to review and execute those alongside of the current fund docs. So that's just the last two things that our team will need, independent of the fund, but also just so we can make sure that we have our own I's dotted and T's crossed from a technology standpoint.
And just to clarify that, sorry, Joe, did you have something?
I was going to answer the question, Michael's question in the chat, but go ahead.
Okay, perfect. I was just to clarify that for the use of the technology for this program is at no cost to the CDFIs.
Yes.
So it governs the relationship, but there's no additional cost. And then, yeah, go ahead.
Yeah, so great question, Michael. The question was, can we use our own closing docs with the borrower, or will we have to adopt docs? So one of the features of our model that really makes it go is that we do have a standardized form of loan agreement, note security agreement, that we ask all participating CDFIs to adopt for this program. And so, we feel like this form was put together in collaboration with a number of kind of core CDFI partners we've worked with over the years. So we feel like it is pretty lender friendly, pretty commercially standard. And would be happy to kind of answer questions about some of the ins and outs. There is some ability to tailor it to your organization. So if there's specific legal terms or notice requirements, things like that you'd like to have implemented, we can work with you on that. We have done that with other lenders, but the sort of the main guts and structure is going to be program standardized for the program. And then in addition to the kind of loan agreement, we have some standard, some kind of treasury template certifications that will ask you to collect from your borrowers, and even in some cases submit as a lender with each loan that's closed for the program. Those, again, just sort of demonstrate compliance with some of the key SSBCI requirements, and also are requested in connection with the data collection for the program that the Treasury has mandated on all of us.
Wonderful. I think we've covered most of the high points. We'll see if there are any additional questions. So my question just went away. Additional questions that you all have. Otherwise, Christina, I will turn it back over to you.
Thanks, Beth. If people do have questions, how do you want them? Do you want them to email me or you, or we can put our emails in the chat so this way that people have them. But I think probably emailing Calvert directly would probably be the best solution, so you can get the best answer. I will say also too, there was a mention of funding sources, and Liz is from one of our existing New Jersey CDFIs. And so Liz, I wouldn't want to see you use our loan to lenders or our Main Street Lenders Grant to support this product in any way. So
Of course, yep.
yeah. Yeah. I appreciate the question because it came up for loan loss reserve as well too. But we would keep those separate because we get appropriations and, you know, we provide those sources at very attractive rates. So we just want to keep it separate and apart. But beyond that, I will put my email in the chat. So everyone, I'm going to do that right now. So this way people will have it. And then this way, if you have additional questions that you think about, and Beth is always here as well too. I'm happy to connect you so we can make sure we get every question addressed. So, because obviously the more the merrier, right? So the more partners we have beyond just, you know, we have our traditional partners now that we've been working with, but we also want to expand that and be able to take on as many as possible to just serve the New Jersey businesses. But we want to make sure it's a right fit for you as well too. So thank you for joining. We'll have another session probably in July if you feel like you want to answer, you know, get additional questions answered as well. Feel free to join that too. And thanks for taking the time to listen to us and learn about this new resource. That's all I got.
Thank you all so much. Hope everybody has a great 4th and enjoy hopefully the sunshine after the smog.
Thanks, everyone.
All right. Talk to you soon.
Cheers. Thank you.
Bye.
Thank you.